In this video, we're taking a look at Bitcoin, why the dip yesterday, and also providing a health check to see where we are in terms of our top signals. This will be a recap of some of the signals we went over in last month's video. So if you enjoy the content in today's video, make sure you subscribe to the channel, turn on the post notifications, and check out the pinned comment down below. So as you would have seen, yesterday we had a bit of a pullback. We went up to around 68K and dropped to around 64K. Now, why this BTC pullback? Well, there was a massive increase in Bitcoin margin futures. So that open interest spiked to huge levels. This means people were going long on leverage, and these guys therefore got wiped out. So no free lunch, these traders in the process of being shaken out, as Dylan Leclerc posts here. As you can see from this spike, it was quite astronomical, the amount of leverage longs in the marketplace. And from this aggregated chart here, you can see that there's a huge spike. So this was an absolute beast. One of the biggest spikes in open interest we've had thus far. So this just shows you how much Bitcoin was on the line in leverage positions, and those levered people got wiped out. With a number of factors that could have played into this, whales can see this kind of open interest and just dump prices to take out the overzealous traders, and even exchanges as well are incentivized to do similarly. So this from Will Clemente, in his opinion, long liquidation cascades are a beautiful thing. Not only is this a beautiful buying opportunity for many in the market, but it's also a different paradigm. No one comes to bail these guys out, introducing a key underlying principle that the current systems don't have: personal responsibility for your own decisions. So what happened here yesterday was we had this massive spike. So this one came in to the upside just as the inflation figures were announced from the US. So Bitcoin went from roughly 66.5 up to 68.5, even up to around 69 on a wick here. And then after this, we had some FUD, plus we got the longs getting absolutely smashed here, and the price dropped from 68,600 all the way down $5,778, an 8.42% move in just 3 hours time, and a major shakeout there. So a major up and a down here, but Bitcoin recovering here and seemingly catching its breath once again, and probably will trade a little bit sideways here. So as Sam Tabasco, as we call him from Alameda, went to this store, did I miss anything? Fresh dips on display. So pretty much the consensus here is that the dip was for buyers, as it was a combination of leverage longs getting rinsed, and also we had this, the Evergrande FUD coming back out once again, and it came out just as we hit that peak price point. So is that a coincidence, or is that the news media trying to manipulate the markets once again? I'll let you decide that for yourself. But the Evergrande FUD seemingly has been overhyped. There was just one report that they had actually defaulted on their payments and that they were going under. But reading up this morning, it seems that that was an over exaggeration and things aren't as bad as that. Of course, it's not a good situation, but it seems that this news was used to spin a bit of a story to cause a price crash. But if we zoom out a little bit here on a 4-hourly chart, things do not look all that bad. And to be honest with you, yesterday didn't faze me one bit whatsoever. As we're going up, people are getting overzealous in the market, leveraging themselves to the tilt. You're going to get these leverage washes. This will not be the last one as we go up here. And in a broader context, this was a good dip to buy because we know Bitcoin has the Taproot upgrade coming in literally a number of days. So Bitcoin getting its first fundamental upgrade in over 4 years since SegWit in 2017. So fundamentals are improving as we speak. The technicals look good. So that very much looked like a buy the dip opportunity. On top of that, with those inflation figures being reported at 6.2%, and we know that historically the governments fluff the figures. They want to make you feel as if it's nowhere near as bad as it is. Well, realistically, it's probably double that. So as Jeff puts here, that means the true inflation is roughly 12.4%, even if we just call it 12%. In other words, this actually means that you lose 1% of your money's value every 30 days, which is a rather stark contrast to the, 1.4% that they were predicting earlier in the year. And now these official figures are out and we can probably double them up here. To lose 1% of your monetary value each and every month is quite a scary thing. And you can see that hyperinflation is potentially on the cards here, just like Jack Dorsey tweeted. But let's jump into some of our Bitcoin top signal indicators to see where we are in this race. So the first indicator we're looking at here is the Bitcoin 2-year MA multiplier. So essentially we have a green line and a red line on the chart. And as you can see from the chart, when we go above the red line, it's pretty much get the heck out of there territory. So the green line is the 2-year moving average. Currently that comes in at around 26,000 bucks. And then the red line is the same moving average, but multiplied by 5. So 5x 25K is all the way up here at around roughly $125,000. So if we were to go all the way up to 125 right now, that would be get the heck out of there territory. Typically, when we get into this red period, and we've broken those lines historically, what we've seen is that within a 3-week period, we've actually hit the top of the market cycle. So you do have a little bit of time when we pass into here, but it's a really good signal to get the heck out of town, take your profits, and potentially run. But as we can see from current status, we're maybe 55-60% of the way up towards the red line, but nothing too outrageous at this point. So this indicator is not flashing red just yet. The next one here is the pi cycle top indicator. The calculation for this given here for you mathematicians, and a full explanation can be found down here as well. We went over this in my last video, so I don't want to spend too much time on it. But what you can see here is that simply when the orange line passes through the green line, we pretty much hit a peak for the cycle within the next 2, 3, 4 days roughly. So this happened back here in 2013, as you can see from the red dashed line. Again here in December of 13 as well. And if we just go out more recently, December 2017, and then for this intra-cycle peak here back on April I think it was around the April the 12th or 11th, orange line passed the green line and we had a market cycle peak, or an intra-cycle peak at least. So if we scroll back out and we just have a look at where we are right now, you can see there's quite a bit of distance between the orange and the green line. So again, the pi cycle top is not flashing red warning signs just yet. Now here we have the relative unrealized profit and loss. This is also called the NUPL over on Glassnode if you've got Glassnode. Essentially, this one tells you how much greed is in the market by how many people are actually in profit. So on the left-hand side over here, this is the percentage of people in profit. And of course, as we get into this kind of territory where you're in like 80, 85, I think the highest reading is this one here, around 86%. So that means 86% of all market participants at that point were in profit. So there's only a certain amount of time before people will start taking profits there. Everyone's already made bagfuls of money. And if you think about earlier participants, they would have made huge returns on their gains. And so as we move into this kind of red territory, which is a reading, I would suggest above 75%, that is again a get the heck out of there kind of scenario. We got pretty close here in February, up to around 75%. The actual peak was around here somewhere. At that point, we were at 71%. And then of course we had a bit of a crash. As you can see, these are different color coding. So optimism and denial is kind of where we are right now. We're not actually in the greed section for the overall percentage of people in profit right now. So this would suggest we have quite a bit of juice to go in the tank. We're at around 47-48% of people in unrealized profit. And you would expect we can get at least up towards this 75% read on the chart. So again, room in the tank, no red flashing warning lights just yet, but this one can be overlaid with the Wall Street cheat sheet if you like to use that kind of thing. And you can think about where exactly we may be on this indicator. Maybe we're around the belief to thrill stage, I would suggest. Belief is time to get fully invested. I think quite a lot of people are already there. And then thrill is I will buy more on margin and got to tell everyone else to buy. And I think maybe if we get, say, another double up on your portfolio right now, you may be feeling this kind of thrill area before we get to euphoria, where everyone's a genius. Numbers are literally flying up all over the place, and there's just too many people entering the market that the inevitable is coming. I would suggest we're somewhere between belief and thrill here, maybe even towards thrill slightly, but worth keeping tabs on this and seeing exactly where we potentially are in this cycle. Then next up, we have the Bitcoin wallet sizes with over 1,000 BTC. So this is the whale count. And as we can see, the whales typically will sell off into big price rallies. But if we look over the last couple of months here, we can see that these guys have been pretty much trending sideways around. There was 2,135 of these mega whales in mid-September, and now there's 2,155 around mid-November. So over the last 2 months, we've gained some additional whales. We haven't lost some of these mega whales. So this indicates that in general, the whales are not selling off at this point in time, and they may actually still be in accumulation mode, which is bullish for the Bitcoin price. Again, with those inflation figures coming out, it's not hardly a surprise. Now, the next indicator is the Bitcoin rainbow price chart, or the logarithmic regression bands as Benjamin Cowan uses. He did a video yesterday on the Bitcoin market cycles, overlaying them from the market cycle bottom previously and also the halvings. This was really interesting to watch to see where we are. And he's continuing to suggest that the lengthening cycles will play out somewhere into 2022. And looking at the rainbow band here, it shows us at current price point, we're around this deep orange color, which is still in a territory known as, is this a bubble? But we typically go into FOMO and then seriously sell and potentially the maximum bubble, the dark red at the top, if the previous cycles are to play out similarly. We actually went off the scale here in 2013, which would be insane. If we went up there, say, by the end of March of 2022, dark amber is around 112K. The very deep red here is around 152K, and then the get the heck out of town maximum bubble territory would be around 200K, and right to the top here, somewhere maybe around 250K. So it does look like, in terms of where we are in this market cycle, that from this indicator as well, there is still juice in the tank, and the lengthening cycle theory is likely to play out. Of course, don't put all your eggs in one basket. You want to be hedged in both directions and take profits as we get blessed by this market. Then other indicators I like to look at are the Google Trends, and we did have a steep uptick here. Previous all-time high for Google Trends for the word crypto were back in May, and then recently we went from the last time we did an update video on this in mid-October from a reading of 44 all the way up to 80. So there was a lot of news media hype recently and a lot of people getting into cryptocurrency. It has been over the news quite a bit recently. You're seeing the Apple CEO jump in. There's still rumors of Tesla allowing for its payments once again, and Elon Musk just selling off a load of Tesla shares. Maybe he'll buy some Bitcoin. But as you can see, we hit a reading of 80. We've just dipped down to around 70. But the retail FOMO is definitely coming back into the market here. We can see this from a different range of metrics, YouTube subscriptions here on my channel, the number of Twitter followers some of the big personalities are getting, the absolute shitcoins pumping like crazy, all the dog memes going up hundreds of % in a day and things like that. That's still going on. So there's definitely a lot of retail entering the space. So in terms of the Bitcoin on-chain analytics and those technical factors, it looks like we're not overheating, but maybe some of the social factors are suggesting that we are maybe overheating a bit. And fear and greed, we are definitely in greed right now. And the dip last night doesn't seem to have affected things. Maybe it will on the next count here, but it says we're still in extreme greed at a 77 rating. So as it stands, we're in a position where it looks like the on-chain data is pointing onwards and upwards. It looks like we're going to have a lengthened cycle here, and that primarily the main drivers to this market are going to be institutional demand and those searching for an inflation hedge right now. So there's quite a few factors that would make me think that this cycle can go on longer than people anticipate, which is going to be very fruitful for us. And if this does play out in that kind of manner, just take consistent profits out of this market, because if it goes on for a long time, your altcoins are going to be worth ridiculous amounts anyway. So make sure you do pay yourself. And that's kind of my approach to this. Pay myself on the way. If this goes on for a lot longer than we expect, happy days. But if it does crash, you've already got some profits out of there, and you can reinvest at a later date. So I hope this update was useful. If it was, drop me a comment down below and let me know if there's any additional signals you'd like me to add in for the next one. We'll try and do a monthly update on this. Make sure you subscribe if you're new, like the video, comment below, and I'll see you in the next one. Goodbye.